Hello, hello, good morning and welcome. My name is Lysandra Everett and I want to welcome you. So if you are watching the replay, make sure you hashtag replay so that I know that you were here. I totally appreciate my replay viewers. And if you're watching this on YouTube, thank you very much. I actually post my replays on YouTube. Make sure you subscribe so you don't miss anything. And this is going to be a good one today. So I'm going to give you a moment to get on. When you hop on, let me know who you are and where you're from. And while you're hopping on, I am going to share this out in a few of my favorite places. Okay. Hello, hello. Come on in, come on in. Let me get this shared out and then we're going to get going because, man, I got a lot to go through. I'm actually a little bit late today because my lawn dudes are here. Y'all know what happens when the lawn dudes come. You can't hear anything. So, yeah, so that's why I'm a little bit late today. All right. I got to get this in a few of my spots and then we're going to get going. Okay. All right. Let me get one more in and then we will go. Because this is, it's definitely a hot topic. I've been spending my morning actually reading this this tax reform thing. This is what I've spent my morning for the last 2 hours or so reading this and really trying to understand what this means. Good morning. Good morning. All right. Okay, there we go. All right. Good morning. Good morning. Okay. So again, welcome to the show. My name is Lysandra Everett. I am the Home Biz Tax Lady. I help home business owners win the tax game by helping you keep more of the money you earn and paying less to Uncle Sam in taxes. I am here Monday through Friday, 9 o'clock-ish. And when you tune in my show, you're going to hear about latest tax topics. I'm answering your tax questions. And yeah, we're just having a fabulous time. All right. So let's get down to it. Let's talk about these proposed tax reform. All right. So first of all, I got the whole thing here. I have spent the morning reading, researching, scribbling, and really just, thinking about just the overall impact that the tax reform is going to have, because it's supposed to be, this effort to really help middle class families. And the question is, will it really? And from what I've seen, I don't know. I really don't know. All right. So, so the first thing is doubling the standard deduction. So the current proposal is to have $12,000 for single filers and $24,000 for married taxpayers filing jointly. Please note there is no head of household, there's no qualifying widower or anything like that. You're either going to be single, married filing separate, or married filing jointly, which married filing separate, you're going to have the single rate anyway. So there will be no additional, there's no step in between. So currently there is, $6,300 for single, $9,300 for head of household, and $12,000 for married filing jointly. Okay, so there's that middle step there for head of household, and for qualifying widower, I forgot what that was, but anyway, there's no middle step. You're either going to be single or you're going to be married filing jointly. That's it. Okay. So, with this doubling of the standard deduction, that part sounds great because that means that there's more of your income that is not taxed, but they are removing the personal exemption, which is currently $4,000 per person, right? So what that means is that that additional $4,000 that you get to reduce your income by per person is going away. So for instance, if you have a family of 4, right? Let's say you are married and you have a family of 4, 2 spouses and 2 kids, right? Good morning, everyone coming in. So if you've got 2 spouses and 2 kids, not only do you get your married filing joint $12,000 standard deduction, but you also get to reduce by another $16,000 for your personal exemptions. Okay. So now that extra $16,000 of personal exemption is going away. And that's because it's supposed to be wrapped up in this doubling of the standard deduction. So that is going away. So while while it sounds good to double the standard deduction, the removal of the personal exemptions, it really just kind of zeroes that out. Okay. So they're giving you something, they're taking something away. Devil is always in the details. Doubling that standard deduction sounds good until you take away the personal exemption. So for instance, if you have, 3 or 4 kids, right? So we're talking about that $4,000 per going away. All right. All right, so let's talk about the tax structure. Now, one of the things that they were talking about is reducing the tax brackets from 7 to 3. Can I tell you that really does not do much of anything, okay? Because it's the people in that 25% is where most people are. And, and that, can I tell you, when I looked at this earlier on in the year, when I looked at this, I think with the current income breakdown, the average person would probably see about a 1% reduction in their overall taxes. Where this is going to really be impactful is in the upper income limits. And I want to say $250,000 plus is where they're going to really see a big tax break with reducing these tax brackets, because they want to reduce them to 12, 25, and 35%. And so that upper tax bracket will probably see about a 6 or 7% reduction in taxes, along with double the standard deduction. So they're getting double the standard deduction as well as the reduction in their tax bracket. So that's where you're going to see the most impact as far as taxes saved, and not necessarily in that middle income area. So they haven't defined exactly what the income levels are going to be yet. So there's no real way to know, but based on what our current brackets are, and just shifting those income tax brackets, the overall, just on average, it'll be about a 1% reduction. Some people may see a slight increase. Some people will see a slight decrease, but on average, it's about a 1%. Okay. Let's see. Okay. So the child tax credit and middle class tax relief. Okay, so one of the things that they're doing is with the child tax credit. Woo! I've been working this morning, y'all. I have been burning up this computer, really looking at numbers here. So I'm kind of fried, but hey, I got to let my folks know, right? All right, so with the child tax credit, it's currently the first $1,000 of the child tax credit is refundable, and that's going to remain. Okay, that's $1,000 per child. All right. Let's see. So but what they're talking about doing is increasing the levels at which the child tax credit is going to phase out. And that is going to be interesting because, again, remember, they're doubling the standard reduction and removing those personal exemptions. So now that's going to knock some people out of qualifying for some tax credits. So how they actually increase the income for phasing out, that's going to be interesting to see. That hasn't been determined yet. One of the other things that stuck out to me too was the earned income tax credit, because this is the tax credit that was really designed to help keep people out of poverty. It came out in 1975 under Ford, I do believe, to help combat the rising costs of food and gas. And so that's where this earned income tax credit came in. In 78, everybody said, okay, we think it's a great idea. So, we're going to make it permanent. But it's also one of the highest paying income tax credits. So when you're seeing people in the middle income area, right, we're writing checks, and then we're seeing people that have lower income jobs and they're getting these $10,000 tax refunds. And you're sitting here like, how are you getting a $10,000 tax refund? I'm over here writing checks. Well, it's the earned income tax credit that is, that's coming into play here. Now, but like I said, with doubling the standard deduction and removing those exemptions, you're going to have more of a take home. So then it makes me wonder how the qualification for that earned income tax credit is going to work with all these changes. So they haven't really given any numbers yet. So it's hard to see how this is going to work. But I'm going to tell you right now, though, I'm not liking it for my single parents. I'm just not liking it right now because there's too much gray, right? There's too much unknown still, and I'm just not liking it. Okay, but that's just the world according to Lysandra. Now, it also provides a $500 non-refundable credit for non-child dependent. So basically to help care for an elderly parent or something like that, okay? Now, itemized deductions, okay. This is another one that is, I'm really just not feeling it, okay? With the itemized deductions, this will eliminate a lot of the itemized deductions, okay? But they still retain tax incentives for home mortgage interest and charitable contributions. Okay, but what about medical costs? That's going to be gone. So for my folks who have chronic illnesses, who have, high medical insurance, who, elderly people that, if you're going to the doctor and whatnot, all those medical costs gone. That's gone from being able to itemize those deductions. So again, not liking it at all. What else? Oh, state and local taxes. Now, it really wasn't clear to me on the property tax part, but state and local taxes that you pay are going to be gone. So they're talking about removing your medical care, those medical cost deductions, as well as the state and local tax. Again, that's just that's just not good especially when you consider the state of healthcare right now and how much people are paying. Okay. I've said this 1,000 times. Healthcare is not working. I don't care what they do with it. The Affordable Care Act, it helped a lot of people, but it hurt a lot of people. Even before the Affordable Care Act, there were already a lot of people hurting. So regardless of what they do with healthcare, somebody's going to be hurting. Okay. That's just the way it is. And with these high costs, right? With these high costs of medical care, these high deductibles that people are having to come out of their pocket, and you're not able to deduct that from your taxes. This is going to get funky, right? For a lot of folks. Can I just be real right now? Like, it's about to get real, people. Okay, we are really going to have to, number one, get smart about our finances. And number two, please do not rely on this government to come for you. Just don't, because they're not. Okay, so let's see, the framework retains tax benefits that encourage work, higher education, and retirement security. Let's see, the tax reform will aim to maintain or raise retirement plan participation in workers, because one of the things that they were talking about is taking away the tax benefit for 401ks. So it would be after tax deduction instead of pre-tax deduction. Okay. All right. Now for us, from a business owners too, right? Okay. So one of the things that everybody was turning backflips over was that he was talking about reducing the tax rates for small businesses for pass-throughs. So pass-throughs are, sole proprietorships, single member LLCs, partnerships, S corporation. Those are pass-throughs, right? Everything except in a C corporation is a pass-through. So one of the proposed reforms is to reduce the upper level tax rate to 25% from 39.6%. Everybody go, yay! No. And let me explain to you why. Because and let me explain this 39.6%. So because this is a pass through, we're talking, it's going to wind up on your 1040 anyway. So whatever your, and I want to say 39.6%, I think that's in the $250,000 income range is where that 39.6% is, right? But for the average small business owner, this really means zero, right? And let me explain to you why. So according to the Small Business Administration, the average sole proprietor pays 13.3% effective tax rate. For partnerships, it is 23.6% effective tax rate. And for S corporations, the average effective tax rate is 26.9%. So, so reducing that to 25%, yeah, my S corps on average are going to see a 1.9% in tax reduction, but overall, it really does nothing for the small business owner. It's going to be business as usual for us. And normally when you get to that high of an income anyway, you're already going to change tax structures. So, so this is one of those things that sounds really good, but in actuality, it does nothing. Okay. Now talking about the tax rate structure for corporations, they want to reduce the top corporate tax rate to 20%, which is below the average of, worldwide of 22.5%. And again, that is with the idea that lowering the tax rate is going to bring corporations back to the United States, and that's going to create more jobs and, boost the economy, which we also know as trickle-down economics. So let's talk about that. Are y'all getting value out of this? Or y'all, is this helping you guys understand some stuff? Give me some heart, some something. Are you getting some value from this, or am I just talking to myself this morning? Okay, so let's talk about the trickle-down economics when we tried it the first 2 times. Okay, so President Reagan was the first president that I know of. So if somebody knows their presidential history more than me, okay, great. But as far as I know, President Reagan was the first one to talk about this trickle down economics, right? So, but when this happened, though, what happened is our federal debt tripled because he increased spending by 2.5% a year. Okay. And then we tried it under Bush, and unemployment went up 6%, which unemployment, that's the indicator of really how well the economy is doing. That's why the unemployment rate is such a big deal, because it's based on how companies are hiring workers. So, when people are, when we're recovering from a recession or something like that, when we are recovering from a recession, employers are slow to hire people because they're recovering. They're like, okay, we're not trying to go through this drama again. This only makes sense, right? I mean, you think about when you go through a personal financial crisis, you're not so quick to go buy a whole bunch of stuff. Well, and for business owners, it's the same thing, because employees, as much as employees would like to think that we are an investment, the truth is employees are an expense. And so that's what employers that, business owners have to look at, like, is this going to be worth the expense for me to hire someone right now just recovering from a recession? So I really wanted to make that clear. Okay, now, so let me give you some other fabulous numbers for you to really understand how, this trickle down thing really affected us overall. Okay. So from 1979 to 2005, the income for middle income America rose on average of 6% from 1979 to 2005. Okay. Now, the top 1/5 of America, their income rose 80%, 80, 6%, 80%. The top 1%, their income tripled 3 times. Their income tripled. Okay. So what does that mean to you? Okay. Like I said, this is about to be some interesting times. These are just proposed reforms. They have not gone into they haven't gone into effect yet. They still got to get this through the House and the Senate and all of that stuff. But what that means to you is it's time to get smart. It's time to get smart about your money. It's time to get smart about leaving legacy for your kids, because this is a time, and my great friend, Nicole Cooper, she shared a great video and talked about it. We are 2017, our last great recession was in 2008 with the real estate, just debacle, the real estate crash. And at that time, that's when a lot of people turned to the internet to find alternate means of making money. Okay. We also have, the millennial generation. They're all about the gig economy. This tax reform is aiming to reduce tax dollars from corporations and all of that. Right. So what that is going to mean is that there's going to be less tax money coming in. So now we're going to have to do a few things. There are going to be some programs that are going to go away. You guys have already been seeing that, right? Some of these social programs are going away, and they got to get some money from somewhere. So, right now, even on these tax streets, people who are employment tax evaders, the IRS is coming for you. For people who are non-filers, do not let the IRS find you first. That is not going to be good, because they're coming for their money. Let me just be really honest with you with that. I have a lot of people. I had somebody basically tell me I was some kind of doomsday chick, right? Like, I'm not a doomsday kind of person. I'm a let's be prepared kind of person. So we're going to have to really find alternate means of making money. I mean, the idea of lowering the tax rate for corporations to come back to the United States that will bring more jobs. That sounds good. But what happened? Does anybody know why we have that show, Undercover Boss? Right? It's because, with all of these corporate executives that were making all of this money, these multi-million-dollar packages and whatnot. Y'all remember that? Well, because they brought these companies back. They didn't exactly hire folks like they were supposed to do. They kept more of their profits for their shareholders. They have innovation. Listen, if your job is a repetitive skill, it will be replaced by a machine. Okay. So it is much less expensive to buy a machine that can work 24 hours a day, only need to be repaired, than to hire a person to do that job that's going to require wages, benefits, vacation packages, sick leave, and all of that. Okay. So if your job is repetitive, it's going to be replaced by a machine. You see that now. You see restaurants, the fast food industry, they got computers where you can just come and tap, and order your food, order on your phone, and your food is there. So those are jobs that are going away. You go to the grocery stores, you've got those individual scanners that you can go and scan your own groceries, right? So those are jobs that are going away. Innovation is what is taking jobs away. It is not the immigrant, none of that stuff. It is innovation that is taking your jobs away, okay? Because I don't know anybody who's running to apply for a job to go pick produce, okay? I was born in the country, okay? We had a farm. Even as a little girl, I was out in the field. I wasn't picking a whole bunch, but I was sure out there because I was little, right? I could just barely reach the bottom ear of corn on the corn stalk. But my family was out there picking produce, okay? We ain't trying to sign up for that anymore. So this whole thing about immigrants taking our job, miss me with that. It's innovation that is taking your jobs away. So we have to get smart. We have to get creative. We have to get responsible with our money. I don't know what else to tell you, but with this tax reform, if this stuff goes through, I don't know how long it's going to take effect. They'll tell us that. But so the tax reform, as it stands right now, how exactly it's going to benefit middle America, middle income families, I don't know. But I just know that with the last round of trickle down economics, it didn't work out for us. The rich got really richer. And that is what my friend Nicole Cooper was talking about. She said, this is the time when, we have these recessions and things go south for the economy. This is where the rich people get richer and the poor people get poorer. This earned income tax credit. What was funny about the statistic that I saw, it's supposed to be a credit that, helps keep low income families out of poverty. And the statistics show that only 9% of the people were actually kept, above poverty level, where the rest of the people were made less poor. What a term, less poor. So this, again, the whole thing is supposed to be, simplify the tax code so you don't need a tax professional. So can I tell you that, even now, a lot of people don't need a tax professional. It's just that you haven't taken the time to learn how to, learn how to do your taxes and not be shady about it. And I tell people all the time, if it's just you and your W-2, you don't need me to do your taxes. You can do your own darn taxes. Will I help you? If you hire me, heck yeah. But I'm telling you, if the tax professional is telling you, you don't need me to do your taxes. If it's just you, your W-2, you might have your home mortgage and all of that stuff. You don't need a tax professional for that. But I'll do it. I don't turn nothing but my collar in that respect. But, it's only because people just don't take the time to read and understand or even ask questions about what's going on. And the tax software that is available, it's easier for you to get the tax software to do your taxes, right? You don't need to go to a tax franchise and pay $500-$600 to get your taxes done. Can I tell you that? You don't. Even with the whole, paying for your tax preparation out of your refund. I know I'm going on 30 minutes, but I got to tell you this, and then I promise I'm gonna let you go. So here is a bit of information for you, a bit of insight. These tax preparation places. Now, I used to work at one. Okay, I'm not hating on them, but we need to be educated consumers in this respect. Okay. The tax franchises are where they are for a reason. Okay. They are in predominantly middle to low income areas because these are the people that are getting the highest tax refunds. So for a person that's getting an $8,000 refund to have to pay $800, $600 for tax preparation, they're focused on, I'm getting $8,000 back. I'm going to pay you whatever I need to get my $8,000, right? But can I tell you, you don't have to do that. Okay. Because even if you don't have your own tax software, you can go to a regular, you can go to a tax, a mom and pop type tax place, and they offer the same services, right? They offer the exact same services, but at a fraction of the cost. The reason it's at the fraction of a cost is because they're not paying their high overhead. They're not paying franchise fees and all of that. Now, some of them don't offer that because, you know what, they've been burned. There have been people, and it happens to the tax franchises too, where people are supposed to get a refund and then that refund gets held because the person owes, you know, a student loan, child support or something like that. Then that tax franchise doesn't get paid. They have to absorb that cost. Mom and pops really don't have that kind of flexibility. So they want you to pay for your tax preparation up front. So they make sure they get paid, but they don't charge you as much as these tax franchises. And if you would, when you get these $8,000 refunds, if you are willing to pay $800 to file your taxes at a tax franchise, take some of that $8,000, set it aside in savings to pay less the next year, so you don't have to lose all of your money if you still qualify to get it. Can we think like that? Can we think like, instead of getting this huge tax refund and then going buying TVs and cars and paying off payday loans and all that stuff, how about we get smart about our money this year? How about we not go try and buy up all of Target for Christmas so our kids can have? The kids play with the darn boxes anyway more than they play with the stuff. So, woo, okay, y'all. I'm sorry. I done went off on a whole complete tangent. I'm so sorry. But guys, we just got to get better. We got to get better with our money. We have to make smarter decisions. If you want to get out of, get out of poverty, we got to make smarter decisions. And it's number one, it's how we spend our money. A tax refund is a great place to start. If you get your tax refund, pretend like you didn't get it. How would you be living your life if you did not get that tax refund? Put that tax refund in some savings and do what you were going to do. Do that. Okay. Like, I understand we got bills. Okay. I understand that, you know, our kids need clothes. We got to buy groceries and all of that stuff. Got it. But you still need to make a decision to save some of your money. Like, really. Okay. Woo, okay. So now I'm taking a woosah, but I hope this really helped you out, guys, and trying to understand exactly what's going on with this tax reform. And we'll see what happens when it, with whatever gets passed. We'll see. All right. So that's it for me, you guys. Make sure to join me over in the Tax Players Club. And if you have not liked my fan page, please go and like my page at Home Biz Tax Lady. And that's it for me, you guys. I will see y'all tomorrow. All right. Have a fantastic day, guys. Bye.